is right. You're watching Insights from Africa. And ahead of the break, we looked at the challenge of mobilizing global capital for Africa, the risk perception, the financing gap, and the need for scale. But even when capital is available, it still needs deep, credible markets to land in. And that brings us to the role of exchanges themselves as the plumbing of capital markets on the continent, so to speak. And to discuss that further from the perspective of Africa's largest stock exchange is Valdene Reddy, Director of Capital Markets at the JSE. Valdene, thanks for joining us. So capital markets are often discussed in terms of capital availability, but exchanges are really the infrastructure that determines whether that capital can be deployed efficiently. With the JSE being Africa's largest stock exchange, does that place some importance on the bourse, not only being this trading venue, but also being a broader capital mobilization platform, if we want to call it that, for Africa?
Hi, Bronwyn. It's good to be in conversation with you. You're absolutely right. The JSE as an exchange is a capital mobilization platform for Africa. So it represents far more than a trading venue. And really what it does, it mobilizes capital in an ecosystem that connects issuers who want to raise capital, investors who put their money behind these investment opportunities, and then market infrastructures across the continent and connected to global markets in a way that can promote secondary trade activity, which really gives the liquidity profile of the capital raise and for investors to make a decision. So it spans a lot more. It spans origination, listing, definitely price discovery and what the right price should be in terms of capital formation, liquidity provision, and then the most important element is actually post-trade certainty and settlement with investor protection from the regulations. And all of this is really essential to, one, unlock Africa's growth potential as an investable opportunity to give investors confidence in markets, public markets, especially through exchanges and mechanisms they can trust.
It really is a tough task, and I know I've just highlighted it as Africa being this one kind of block, and yet African markets are fragmented, and so the cross-border investment that we'd hope to see really can be difficult. What do you see, though, as the biggest practical obstacles to deeper regional integration, and how can exchanges help overcome that?
Yeah, it's actually quite a good example and case study to see, for one, the markets formation in South Africa relative to the rest of the continent. You mentioned that the JSE in South Africa is Africa's largest stock exchange, but more than that, we are among top 20 largest exchanges in the world. And one of the enablers is really to have regulatory alignment and then the ability for cross-order book connectivity and liquidity. When I talk about regulatory alignment, is how easy can you list companies, but then also get them to unlock either capital opportunities or secondary trade activity in ways that are recognizable. Now, within Africa's capital market, there's two elements that restrict probably the efficiencies of the rest of the continent, and as such, puts a cap on what type of capital market size and activity they have. One is really on regulatory alignment, and because of the different regulatory frameworks and jurisdictions across the continent, it really doesn't make it as harmonious as what could be in terms of attracting capital to an exchange and then further scaling that capital and then the connectivity and liquidity by making it harmonious and interoperable with global norms to really attract different investor bases. So to have that investor confidence, you need to make the appeal factor of the market quite welcoming, and that in itself then promotes secondary market liquidity. The two of them go hand in hand. How much capital do you have and how much liquidity do you have against that? And then the nature of the investor base will be different. So in South Africa, we have a very institutional investor base, and that institutional investor base ranges from asset managers to pension funds to hedge funds and low latency clients. But across the continent, you have a different investor profile base. So if you want a healthier mix, international investors, retail investors, different types of institutional investors, you have to have a framework that is not too siloed to the market, not fragmented across the different jurisdictions, but one that could really be almost interoperable and globally recognized to give investors confidence and liquidity in coming into your market.
You talk about confidence and that then helping boost liquidity, and that coming from off the back of my question around fragmentation, and that then leading to this conversation around risk, really, because risk starting to come in when we talk about fragmentation, that eroding confidence and that then impacting liquidity. So I know they all go on hand in hand, but when we look at risk specifically, do you see exchanges playing a role in terms of how risk is put forward to the market and correctly aligned? Because as I was talking before the break, risk becomes a huge problem on the continent, where we can lay some of the blame perhaps at the feet of ratings agencies, but I think people just really don't understand Africa as a whole or as segmented parts. We're not one country, we are one continent. But nevertheless, when it comes to risk, do you see exchanges perhaps playing a role in assessing that risk so that we can get better pricing?
So I think there's many dimensions to risk, and as you rightly said. But the beauty of what exchanges do is they give a mechanism and a platform for investors to make risk-adjusted decisions. And once you get a risk-adjusted decision, depending on your risk profile or your mandate, you can invest or disinvest as you please. So you've got high return markets, people would have a higher risk appetite to do risk-adjusted returns. So it doesn't mean it's riskless. It means that you chase the right risk with the right mitigations or with the right reward against it, that you're willing to take the risk. So there's many dimensions to risk, but exchanges, through one, its regulatory frameworks, helps investors get a baseline to investor protection that they can trust. The second element is how liquid is your market. It also dilutes some of the risk in that if you need to exit a strategy, you can. But then there's also different risks in terms of how easy it is to get your money out. Are there governance processes in the listings authorities to trust the corporate governance of the companies you're investing in? Are there post-trade and settlement mechanisms that you actually get delivery of your shares or the exposure of the shares, and that corporate actions, dividends, etc. are handled well? That's where we talk about the alignment or the more awareness and visibility African markets can enhance so that they can attract a different investor profile.
Valdene, we are unfortunately out of time, so let's leave it there for today. Valdene Reddy is the Director of Capital Markets at the JSE. And that brings us to the end of this episode of Insights from Africa. But if you want more content like this, or if you want to rewatch any of the discussions we've had on the show, you can find them on the Business Day TV YouTube channel under the Insights from Africa playlist. And if you want to follow us on social media, you can stay up to date with all our content. So be sure to find us on X, TikTok and LinkedIn. So from me, Bronwyn Seaborn, and the rest of the team, it's goodbye for now. Insights from Africa is brought to you in partnership with Standard Bank.